Okay, hopefully whatever this is, the third time is a charm. Okay, so we are going to talk about the tracker and how it's used. It's pretty darn simple. What you have to concern yourself with are the first four tabs here, the zone, beta. Anything that says beta, that's just stuff that we're testing in the background. If you want to take a look at what we're looking at, these are not actual signals, but stuff we've been looking on. Let's go to the zone. Okay, so first, you have the data entry. So our last trade was this HD trade that we got stopped out on. You have the entry. These are always going to be the same date because we don't hold anything overnight. Underlying symbol, where the stock was when we got in, where the stock was when we got out. This stock stop is the 20 period EMA, even though we don't necessarily use that as our stop. Our stops are based on premium gained or lost. Then the option that we do, in this case we did the October 4th 235 calls. We bought 5 of those for 95 cents. We sold them out at 81 cents. Why did we buy a 5 lot? Well, we go down here to this allocation calculator that I provided for you. You put in your account size, you get a percent allocation. I'm suggesting a 2% allocation for zone trades, so we're risking $500. 2% times $25,000 is $500. Cost of the option, that comes out to 5.26. Everybody knows we can't do a point anything of an option contract, so we round it. 5%. Five lots, excuse me. So now we say, okay, well, how do we calculate what our stop and what our target is? Dynamically, you can put in whatever you want, but what I'm using a 15% down drawdown and a 25% profit target. And so 85% of 95 cents is 81 cents. 125% of 95 cents is $1.19. There's your stop, there's your target. We got stopped out at 81 cents. Actually, I got stopped out at 79 cents. A little slippage in there, excuse me. So we bought it at 95, we sold it at 79, we lose $80 on that one. Then we look over here, and if it's a loser, we put it in this column. If it's a winner, we put it in this column. We put the number 1, because that's going to trigger some other analytics. If you want to keep track of your capital at risk, all this is the premium that we paid, 95, times how many we did, times 100, because that is the multiplier for equity ETFs and index options. So we risked $475. Then we keep track of the percentage win and the percentage loss. That's where this 1 comes in. This says, hey, if there's a 1 in this column, I want to calculate what the profit was, $27 on the $465 that we risked. 5.81% winner. In the case of HD, it's a 16.84% loser. Duration signal, that you're not going to need that because all these are going to be day trades, but there is something in there because of the swing we put in there. This percentage number is converted over into dollars, so if we want to look at not only what the percentage wins are, but in dollar terms, we can do that here. And that is it. And so now the rest of it is just a summary. We can look at, okay, how many contracts have we traded, what the commissions are, because everybody's commissions are different, but you can put that in there, how much money we've made since we started this about 6 weeks ago. So we can look at our average capital at risk. All that does is take the average of all of these numbers here in the Q column. We can calculate that as a percentage as well. We can look at what our average percentage win is and our average percentage loss is. So not only is it important to look at this number, right? You look at this and you're like, well, we've had 63 winners and 59 losers, right? That's kind of like, that's 51% versus 48%. Yes, but when we win, we make 16%, and when we lose 8%. So basically, our winners are twice as big as our losers. What does that translate into? That translates into an annualized yield of just about 70% for the year, just for the zone. Then I keep track of, you know, what we're doing each month. Obviously October 1st is the first day of the month, so this is what our P&L today has been on zone. And so you can look at it that way, and there's a couple other calculators in there if you want to mess around with it, but that's basically it. I mean, you're not going to see a whole lot of difference between the scalp is going to look exactly like the zone. Swing trades are going to be a little bit different because we are doing spreads. So like for example, the QRVO one that we did the October 18th 77.5 80 call spread. I have the legs of each, since we paid 60 cents for this thing, the actual prices were $1 over 40. Same thing. Well, why did we do an 8 lot? Well, we put this in here, 60 cents. We are allocating 2% to swing trades right now too. So that's an 8.33 lot. That rounds out to an 8 lot. That's why we did an 8 lot. Do I do a new tracker every day? It's a I mean, this is a continuous. I add to it every day, but I use the same one, because otherwise then you're just looking at, you're going to be looking at 365 or whatever, 260 business days of trackers. So you know, that's not going to tell you much about, you know, how you're doing. So the swings are the same thing that, you know, hey, we have a different a different risk and target scenario here and for swing trades, because these are ones that are held for multiple periods of time. We're taking a 50% loss or a 70% win. Same type of analytics, you know, percentage wins, percentage losses. And so here's a prime example, okay? Swing trading. We're having a 52, let's just round it, 52% winners, 48% losers. But look at this, actually my losses are bigger than my wins. What does that tell me? That tells me that we are in a pretty non-trending market, and swing trading isn't the way to be approaching this, and that's why we've been doing very few swing tradings. There's plenty of stuff going on day to day, and there's been times when swing trading has been absolutely fantastic. But I can look at this and say, you know what, I'm not going to just throw the baby out with the bathwater, but I'm going to pull back on this stuff. And you're getting weird numbers for the duration of the signal, because we're not out of V or QRVO yet. So you just add rows and keep going. Yes. So then the other one, you know, then okay, now we can look at the whole thing as one. And these are just, you know, our average capital at risk has been just under 3%, because we allocate differently for some things. The average win rate is 25.3, the average loss rate is 22.6, but realize that's because of how swing trading is looking. We know that in what we've been doing are scalps and zones, and those are been very profitable with a very good, with a decent win-loss ratio, but a very good percentage of win versus percentage when we lose. Okay, so so what's important in here is, what is this doing in dollar terms? So right now we are annualizing out, if we keep it as we're doing, right about 72% on 509 trades so far this year. Is this the tracker prosper version of a trading journal? Yeah, you could characterize it as that. And so that's really it. Like I said, you know, you don't have to use it, but I think it gives you a lot of self-accountability, which as a trader is important. Not just knowing, hey, I'm up money, I'm down money, but when I'm up money, where is it coming from? It's coming from, you know, blank. Well, then you should be doing more of that. When things are not going well, what's happening here? Swing trading has sucked. Well, then get out of it. You know, I remember, end of last year, I was venting to Scott, and I was like, God, just swing trades just suck. He goes, stop doing them then. I mean, it was, funny. How do we determine entry signal? That's that's the whole class. I mean, without going through, I mean, you're going to have to go through the methodology, because that's what you can either just sit around and watch, or we have these mentorship programs that we can work with you on that. But that's basically the whole idea of the class, is determining entry and exit signals. It has nothing to do with the tracker. The tracker is just the output of the decisions that we make. Dale, do I have a clean tracker with different signals at the bottom? I don't understand what that means, but there is a clean tracker in there if you just want to start from scratch. I believe it's called Clean Tracker. Brilliant name, Mike. It's called Clean Tracker. Let me highlight that for you. That'll get you started. But that's it. It's not rocket science, but it puts everything at your fingertips, and I think it does a good job of giving you that accountability that a trader needs to have. The Clean Tracker doesn't have a zone or swing. Well, then just make a new tab and copy it. All you do is you hit this plus button here, and then that'll give you a new sheet. And then just copy it over. All right. Any other questions on that? I'll get this video out to you guys. I'll put it up on the blog today, and it'll be on the campus as well. Alright, sorry about the technical difficulties earlier. I think we got it figured out though. And okay, let me get this video put together for you. And we're in the slow part of the day. I don't know where they want to take this later on. We'll find out though. Okay, thanks everyone.